Welcome to my First-Time Homebuyers Webinar. Whether this is your very first home purchase or it's been years since you last bought a home, this session is designed to complement the First-Time Homebuyers Packet PDF available on my site, www.landerslending.com. If we've met before or you found me through your realtor, welcome. I'm excited to guide you through this journey. Both this webinar and the PDF are here to help simplify the home buying process and get you excited to take that next step toward owning your dream home. Hi, I'm Kiersten Landers, an Idaho mortgage broker and loan officer. I'm passionate about building relationships with clients, whether they're seasoned investors or first-time homebuyers. My focus is on clear communication and ensuring a smooth, educational, and exciting home buying experience. I'm here to help you confidently navigate financing options and find the best loan solutions tailored to your needs. Buying a home is a significant milestone, and I'm dedicated to guiding you through every step of the process. Working with a mortgage broker like me is like shopping at a wholesale club instead of a big retail store. When you go into a retail store, you're limited to their selection and pricing, just like when you go to a big bank for a mortgage. They only offer their own loan products, and you're stuck with whatever rates and terms they decide to give you. But when you shop wholesale, you have access to multiple brands and better pricing because you're not paying for all the retail markup. That's exactly what I do as a mortgage broker. I have access to a wide range of lenders, allowing me to shop around and find the best loan for your specific needs, often with lower rates and better terms. In fact, according to the Home Mortgage Disclosure Act, mortgage brokers save borrowers an average of $10,000 over the life of their loan. That's real money you can keep in your pocket. Let's start with why home ownership is such a great investment. Owning a home helps you build wealth, gives you more control over your living space, and can even come with tax benefits. Plus, nothing beats the feeling of having a place that's truly your own. Real estate is an appreciating asset, meaning it typically grows in value each year. However, owning a home not only contributes to your overall net worth. A 2024 study reported 90% of homeowners said they are happier since owning a home, and 78% said they'd never rent again, according to the publication Home Bay. Health, wealth, and happiness are all excellent reasons to buy. So you're ready to buy, but where do you go from there? The home loan process has 4 main steps. Don't get overwhelmed. Your realtor and I will walk you through every step of the way. These are not for you to navigate yourself, but rather this slide acts as a map so you can understand the process. First, you need to get pre-approved so you know exactly how much home you can afford. Think of it like a credit card limit. You want to know your budget before you start shopping. This way, you won't risk aiming too low and missing out on a home you love or falling for a home that's out of reach. Knowing your numbers up front gives you the confidence to shop wisely and make strong offers. Next, you'll want to work with your real estate agent to find the perfect home and make an offer. This is the fun part. Remember, enjoy this experience and don't worry about how quick or how long it takes. It's a big purchase, but patience is key here. Once your offer is accepted, we'll move into loan processing and underwriting. This is where having your documents up front can speed this step along. Finally, we'll reach closing day, where you sign the papers and officially become a homeowner. Pre-approval is the first and most important step because it sets you up for success. How is it different from pre-qualification? Pre-qualification is a quick and formal estimate of what you might be able to borrow based on basic financial details. I can usually pre-qualify buyers with a quick conversation about income, debts, and other key factors. Pre-approval, on the other hand, is a much more thorough process. I'll verify your income, credit, and financial documents, giving you a clear budget and a stronger position as a buyer. Pre-approval not only makes your offer more competitive, but also helps speed up the closing process. Without it, you risk losing out to buyers who are already financially vetted and ready to go. To get pre approved, you'll need to provide some basic financial documents as part of your application. These include W 2s or 1099s if you're self employed or a contractor, your most recent 30 days of pay stubs, IDs such as driver's license or social security card, and a 2-year history of employment and residence to help assess your stability. And don't worry, if you've recently switched jobs or have a gap in employment, that's not a problem. We'll just need to explain it to the underwriter when they are ready to review your loan. I'll go over what not to do in the next slide. Now that you're on the path to home ownership, let's talk about some of the common mistakes that could derail your loan approval. First, don't open new credit accounts. This can alter your debt to income ratio, a critical ratio us lenders take a look at, and it impacts your credit score. Second, don't change jobs in the middle of the loan process if you can avoid it. Lenders look for stable employment history, and switching jobs during the process can raise red flags. Third, don't make large undocumented deposits into your bank account. All funds used for the home purchase need to be sourced and verified. Fourth, don't max out or miss payments on existing credit accounts. Your credit score is closely monitored until closing, so keep your balances low and pay everything on time. Fifth, don't make major purchases like a car or furniture or appliances until after closing. Large purchases can impact your available funds and credit profile. Lastly, don't co-sign loans for others. This adds debt to your profile, which could impact your loan qualification. Moral of the story: if it has to do with your finances, speak with me first. This way, I can ensure a smooth, successful closing on your new home. There are so many loan programs available to first time homebuyers, and I'm going to give you a brief overview of each, focusing on down payment requirements and how mortgage insurance works, as these are the most common questions I get. Conventional loans are a great option if you have strong credit and can put more money down. The required down payment is usually between 3 to 5%, depending on the specifics of the loan. If you put down less than 20%, you'll need to pay private mortgage insurance or PMI, which protects the lender in case of foreclosure. The PMI is added to your monthly payment, and the amount depends on factors like loan amount and credit score. However, if you put down 20% or more, or if the equity in your home reaches 20% after you've already purchased the home, the PMI will be removed. If you have any questions about this, feel free to call me. FHA loans are a great choice for first-time homebuyers because they have a lower down payment requirement and are more flexible for buyers with less than perfect credit. These loans are government-backed and do require mortgage insurance called mortgage insurance premiums, or MIP, which lasts for the life of the loan, regardless of how much you put down. The MIP is usually about 0.55% of the loan amount and is divided into monthly payments. FHA loans also require a funding fee, which is rolled into the loan and is typically 1.75% of the loan amount. The required down payment is just 3.5%, and I also offer FHA programs with down payment assistance. If that interests you, let's talk. USDA loans are a fantastic option if you're buying in a rural area, offering zero down payment. The property must meet eligibility requirements based on USDA maps. While USDA loans don't require traditional mortgage insurance, they do have a funding fee of 1%, which is rolled into the loan. There's also an annual 0.35% fee, which is divided into monthly payments and included in your mortgage payment. VA loans are a great benefit for veterans and active service members. VA loans have flexible guidelines and require no down payment. Like other government-backed loans, they also require a funding fee, but the amount depends on whether you put any money down. This overview covers the basics, especially when it comes to down payments and mortgage insurance, but there are more details and guidelines to each loan type. If you qualify for more than one, it's my job to compare your options to get you the best rate the most benefits, and the lowest monthly payments. Once you apply with me, we can dive into the details and customize the right loan for your financial situation. Beyond your down payment, there are additional costs to consider when purchasing a home. Closing costs, typically ranging from 2 to 5% of the loan, cover lender fees, title insurance, escrow services, and other necessary expenses. Your realtor can often negotiate these as a part of seller concessions, meaning the seller may agree to cover some or all of your closing costs as an incentive for you to buy. In some cases, seller concessions can also be used to help you buy down your interest rate. But this depends on the specific transaction and should be discussed with your realtor when structuring your offer. In addition to closing costs, there are third party expenses that are required to complete the loan process, and these are usually paid up front. A credit pull costs around $75 to $100 and is necessary to check your credit score. An appraisal, typically $500 to $800, is required by the lender to confirm the home's value. Appraisers are randomly assigned, and as your loan officer, I cannot communicate with them directly to ensure an unbiased evaluation. A home inspection, usually costing between $300 to $500, is crucial for identifying any potential issues with the property before finalizing your purchase. While an appraisal is for the lender, the inspection is for you, the buyer, to ensure there are no significant problems with the home before you commit. I do know at least one inspector who allows inspection costs to be paid at closing rolled into the loan so that it's an option as well if you don't want to pay upfront. It's wise to set aside at least $2,000 to $2,500 to avoid surprises and be ready for these costs, as you may need multiple inspections or appraisals if issues arise and you decide to pursue another home. If that happens, your agent and I will guide you through the process to make sure you're prepared for the next steps. Beyond these costs, you should also plan for moving expenses, which can vary based on distance and the level of assistance needed. Additional costs such as packing supplies, utility deposits, and storage fees can add up quickly. Being financially prepared for these expenses will help ensure a smoother home buying and moving experience. Let's quickly go over a few common questions I hear from first-time homebuyers. Can I use cash from gifts or sales for a down payment? If you're using cash from a gift or selling something, that money needs to be seasoned, meaning it should be in your account for at least 60 days before applying for a mortgage. Am I a first-time homebuyer if I owned a home before? If you owned a home in the past but haven't in the last 3 years, you may still qualify as a first-time homebuyer in Idaho. Why do lenders need so much info? While it may feel like lenders ask for a lot of paperwork, it's all to ensure you get the best loan possible and is needed to complete the loan with the lender per guidelines and government regulations. So, what's next? First, let's schedule a strategy call to go over your home buying goals. Simply scan the QR code on your screen or visit landerslending.com. There, you'll see a tab that says Book a Call. Click the tab and schedule a time to speak with me. Second, gather your financial documents so you're ready for pre approval when we talk. And third, let's start your home search with confidence. I'm here to guide you every step of the way. Let's get started. Remember, you can scan the QR code on your screen, visit landerslending.com. You can email me at Kiersten, Kiersten, at empirehomeloans.com, or you can call me at 208-270-3861. Thank you for joining me. I can't wait to help you make homeownership a reality.